morning, ladies and gentlemen. Max Capital here with Wall Street Institute and Company. Welcome to another episode of Tuesday's Technicals. Now, if I'm not mistaken, this is the 5th episode, so it's just a video series of us going through the financial markets, first starting with the fundamentals and then the technicals. As far as fundamentals are concerned, we get our news and research from this amazing broker by the name of Infinox, of which we're part of the 14,000 partners. It's got lightning fast execution. Trading platform that's built on MT4 and 5, basically to give you a leading edge in the financial markets with leverage up to 1:200, 300 plus instruments that you can trade. Now, without further ado, ladies and gentlemen, let's get to IX Intel, which is one of the features of Infinox, amazing feature of Infinox, where you track the movements and the development of the markets through market intelligence and expert analysis. Now, let's look at what we have for the week ahead. We have purchase management indexes, the Federal Reserve meeting, the Bank of England, and non-farm payroll. So those are fundamental news to look out for. You can go and read, but really on the Eurozone, where there's expected higher higher number in the GDP. Gross domestic product is expected to turn negative in the third quarter. North America will have ISM jobs, ADP, non-farm payrolls on Friday. Crucial FOMC meeting. Very, very, very key, and one of the biggest market movers as far as Europe is concerned. Is inflation is offset, gross domestic product, financial purchase management index, and the Bank of England probably on interest rates. Asia, I've got purchase management from index from Japan, China, Australia, and the Reserve Bank of Australia. Then Latin America, Colombia unemployment, along with Brazilian industrial production. So here's the outlook. So Canada manufacturing data is expected to be negative. Even the ISM manufacturing numbers are expected to be negative. So you can just go through the non-farm payroll. The forecast is 200,000. Previous month it was 263, which is expected to drop. Average hourly earnings as well. The 5% expected to remain 5%. So basically, you can tell that we're expecting a negative dollar on Friday. Looking at this, less employment numbers, no changes in the US average hourly earnings. As far as Canadian unemployment is concerned, last month it was at 5.2, is expected to be at 5.4. We'll see how the market reacts to all that. Just look at the time. This is GMT, but if in my time zone it's GMT +2, which means this is gonna happen at 2:30 GMT +2, right? All right, without further ado, let's jump onto the charts to see what do we have for us. I'm starting with the dollar index on a weekly time frame. Looking at this, it seems like we are in a bullish order flow. We're in a bullish order flow. Markets just kept on making these higher highs, higher lows. If I would draw my major higher low, then based on that we are finding a bullish sentiment, it would look like this. Excuse me. So stepping down to the daily time frame, what do we see here? We've already we haven't mitigated or came down to this area of demand. which is very, very, very key. So we are anticipating a move. Thus, we try to play it like how the market moves. Probably beat those highs. Further continue to the upside. Stepping down to a 4-hour time frame. I think on Instagram we had a poll based on this. Stepping down to this time frame, what do we have here? We have an immediate area of supply here that has not been mitigated on a 4-hour time frame. So the anticipation will be a weak dollar, also indicated by the focus on the US non-farm payroll, which is coming on Friday. Just to make things clear, we don't trade the non-farm payroll. Why? Because it creates a lot of volatility and it's hard to make prediction, and our approach is a more proactive one. So we don't want to be in the market when all that noise is happening. And also to make you guys understand that what happens in the market is that an economic or political event will happen, and then the market will take a day or two to price that. So we always wait for the market to stabilize before we join on the order flow. So more bearish sentiment expected from the US dollar based on the dollar index. Now I've got the US oil in front of me. US oil. It's hard to tell on the weekly time frame. Daily time frame, one can also confirm some bearish order flow based on this. Don't look too much to the left. Focus on what we have now. And looking at this, we've already mitigated that area of supply. So we can anticipate a further movement to the downside, yeah. Probably break this lows of 76. Stepping down to a 4-hour time frame for further investigation of price. So what's happening to price? We've got lots of areas of supply that were not mitigated. Let's bring this one. Let's adjust this a bit. There we go. We also have this one right here. But if the market continues further to the upside, I would expect to tap into that one first. And as far as demand levels are concerned, we've got this one right here. So what you're trying to do is finding the range of which you're going to trade. But we had this consolidation, a big push to the upside, which made equal highs there. So to me, that is liquidity, which means the market still has to push to the upside to that level. Hence, I'm looking for a demand area to buy from and to take the market higher. So this would be my expectation. Boom. As you've seen, the US oil is negatively correlated to the US dollar. So as far as the US dollar, we're expecting to push further to the downside, but as far as oil is concerned, we're expecting to push to the upside. You can step down to a 1-hour time frame for more refinement, but I believe this is the setup there is for this week. So we're looking for more buying opportunities on oil. Gold for the past 3 weeks or so has been consolidating according to my analysis. But what's really important to note is that we've already reacted from this area of demand. And if I would look for a range to trade on this week, look at this one. Already we know that we've got bullish order blocks, meaning we'll be expecting or looking for more buying opportunities as far as this is concerned. We had to mitigation of this area. Can also look at this as equal highs, right? And my target, should I say, or my area of supply would be this one. Let's change the color. There we go. Yep, more buying opportunities expected from that. We had like a double bottom here the previous week. Let me try to adjust a couple of things here. This with the first mitigation, and then like that. Look for this. This just looked like a nice demand zone that was mitigated. Let's change that to demand colors. And what do we have here? Lower low, lower high. I would consider this as the last lower high, but you can also consider this one. So here I'll consider this as a change of character. Change of character. And from that, we had that big push, market came down, never came back to mitigate this area of demand here, which I would like to believe that's where we headed. Remember, gold and oil move opposite to the US dollar. So, yep, I know I'd said my target would be up there, but first target would probably be this here. This area of supply here. I'll first take my profits here. And if the market allows, I'll take another setup and push further to the upside. Because just for now, considering this liquidity or sort of trendline liquidity or equal highs here. So going down to a 1 hour time frame. This is how my setup for the week on gold looks like. I really hope that makes sense. For me, it's good risk reward ratio, probably 1:10. Let's confirm that. Let's confirm that stop loss below this zone. Target profits all the way up to that area of supply. 1:7, 1:6. For me, it's a good one. It's a good one. I respect that. 1:8 when I find that as long as it's above 1:5, according to our edge, according to our strategy, we are good. Right. Dollar yen at this previous week. There's an area of supply that we tapped into. We talked about it in our trading rooms that this supply was left unmitigated. When was it? It was in 1990, January 1990 actually. Where we finally got to tap into it. We got a nice reaction from it. From that reaction, personally, I would be expecting more of a bearish order flow. This was the last high low. Let's look at what we can do within that range. Well, that big candlestick pushed to the downside, and at this point right here, we had a change of character. At this point, this was the last high low. That change of character. Let's mark that. There we go. We had that change of character, and we had an area of supply here that was left unmitigated, and lots of imbalance. Let's step down further to the 1 hour time frame and see what do we have here. So still we have that imbalance. We can also refine our order block or our supply area to take those dodgy candlesticks. But really, when I look at this, got a breakout structure here, and that slow movement to the upside. So one can consider this as an area of supply. Well, I do according to the standards, and we've already had a reaction, which according to to our standards, again, it's not one of those satisfying reactions we always want to see. Personally, I would want to see a break off or a change of character at this point, and I would expect to move in this manner. Just a second, ladies and gents. There we go. So I'd expect it to push to the downside, break structure or change character, come back to an area of unmitigated supply, mitigate that, and push further to the downside. So this will be my anticipation from USDJPY. I've had a lot of people in the group saying we should be in already. It has reacted. According to me, this is not the type of reactions we're always looking for. We're always looking for a really good reaction as far as the candle wick is concerned. We need the market to wick that, and then we need a big push to the downside that will break structure and then mitigate order blocks. That dollar CAD start on a weekly. Same process, guys, throughout. One would argue that we've got bullish order blocks here. Trust me, I am with you on that. But if you look on the left, there's this area of supply that we wick into nicely or mitigated. So my area of focus would be that last higher low and that last higher high that rejected this area of supply. And we got some equal lows right here. For those who attended our courses would know that equal lows means liquidity, which the banks need to grab before a further push to the upside. Still nothing clear to me up until this time. Liquidity. So looking for the nearest. Before we get to that, I would say we had lots of mitigated areas of supply. Got a mitigated supply there. Let me expand this a bit further so that it makes sense to you guys. We've got another one here. Was it mitigated? No, it wasn't. So we've got this equal lows down here. For me, looking at this, I'm seeing more and more of bearish order flow because remember, we had a change of character somewhere up here, right? So it means market has changed from pushing to the upside and now to the downside. A quick target would be this area of demand. This would be my target. So what's the outlook? What am I looking for here? I'm anticipating price to push probably to this high, from here to this high, and then boom, further to the downside in this manner. Reaction, change of character, and then push further to the downside as we expected a weak US dollar. I don't know about the Canadian dollar on Friday, but as the week moves, this would be my expectation. Also based on this area of lot of imbalance that's here. Looks like we filled in that, but I'd really like to see an order block mitigation. We don't make entries based on imbalance, right? Rather we use imbalance for targets, right? USD CAD. Hope you guys are good with that. Let's look at the pound dollar cable. According to me, I'm still seeing some bearish order flow because this was the last major lower high. This was the last major lower low. So my anticipation here is this week I'm gonna be looking for further weakness, even though we saw some dollar strength. For now, this is what I've seen. We had this area of supply there that was mitigated. Again, how the market reacted to that area of supply is, or should we refine it to look like that? Just a second. There we go. Yeah, actually we haven't really touched it. This is a 4-hour time frame. So yeah, again, as I've said, on a weekly time frame, I'm seeing more bearish order flow, filling this imbalance. So would anticipate market to do this, react, change character, and push further to the downside. First target would be this demand area right here. Fix that. That's my first target. First target would be this demand area. I know there's like liquidity here, and you can use the one below, but personally, I would like to take my profits here and going to a 1-hour time frame. This is how our setup would look like, right? Even though personally, I am already in a buy order here that was taken down here. So now I'm expecting a break of this last lower high. If we break this last lower high, so what I'm anticipating there is a change of character. I know that we're supposed to be taking ourselves the tops when this comes. The other reason that makes me target this low is this area of imbalance. No sell orders here, just buy. So market needs to come back and rebalance that. So back to it. So here I'm anticipating a break of structure, and when the structure is broken, I'm gonna expect price to move back to these lows. For me, I need price to come back here. Need price to come back to this area of demand. Yeah, if we'd go to a 30-minute time frame, this is the current setup. Even though, like I said, I'm already in from this low. I took an aggressive entry, but if we get a break of this last lower high, that would be a candlestick close above it. I would expect a retracement to the downside and a further push to the upside. Let's look at pound yen. Right. Once again, I've got more and more bullish order flow. Area of focus would be this last higher low and that higher high that we just created this week. I'm looking for a break of that, actually, for the break of that. Us chasing these areas of supply out there. Looks simple when I do it, but takes years of practice, not days. Years and years of practice. We had a nice reaction there. I'd like to see if we were reacting to an area of, actually we do have an area of supply here. It's very important sometimes to look on the left hand side to see, because price doesn't just push to the upside or to the downside. No one is reacting to an area of supply or demand, right? So we've got that area right there. I'd like to confirm if we've marked it the right way. This is supposed to be the last candle. Oh, perfect. But there's lots of imbalance above, which will make me not trust us 100%. I'll still be looking for a further push to the upside, hence my anticipation of a break. We already had a break of structure here. Break of structure to the upside. That's a clear sign of a bullish order flow. We had that area of demand. Not really sure if it was mitigated. Step down to the next lower time frame to confirm that. Another break of structure right here. So keep breaking the highs. Clear signs that we're in a bullish order flow. With that, we have this area of demand once again, which was not mitigated. Let's do a further investigation of that on this time frame. Turns out, the importance of refinement. See, could have went with this order block until find that it was mitigated, right? So, which takes us to this one. So this is the order block we'll be looking at taking orders from as far as buys are concerned, but we have a hidden order block here, which you'd understand if you've attended one of our classes. It's imbalance, still a lot of imbalance left here, but I truly believe that we need to see a push, a push to that area of supply, probably break a structure and coming down here. We'll see how this setup develops as the week goes, but overall, I hope you can see. So we've got some nice bullish order flow. Hence, I'm also in a buy trade here, exiting when we get to this area of 172.35. That's my target. EuroCAD, interesting price action here. Start on a weekly. It's very, very important to get that high time frame buys. On a weekly, I would say we've got bearish order flow. Major lower high, major lower low. Step down to a daily time frame to see if we're right about that. So first we had this area of supply that was mitigated right there, and it further developed into this one, which I'd like to believe was also mitigated. So hence my my anticipation of further sells or further move to the downside, but I already see this area here of supply that has not been mitigated, that I would like to see being mitigated, right? It being this one. So according to this, we've already changed character here. This was the last high low. Expand that to make things clear. This was the last high low, and so that's change of character. Like that. It's very important to mark so that you comprehend at which point of our setup we're in. We also had a breakout structure here. So this is where the real difference between change of character and breakout structure comes in. Right. Let's move that to the first reaction there. I'm trying to bring you to seeing this order block that was not mitigated here. Now, according to our strategy, the furthest order block always makes sense to us, right? This one looks nice, man. It's the one that broke structure here. At this point, let me bring it to the center. Bring that to the center and mark that breaking structure. Come on. There we go. According to the rules that we follow as far as which order block to use or which order block can we take a trade set from. We wouldn't consider this one. Reason being, there's lots of imbalance above. We've got also just equal highs, which is just liquidity, right? So the market needs to cover this space. So the anticipation will be markets to push further to the upside like that. We get a reaction, maybe something like this, and a further push to the downside. As far as the downside is concerned, personally, I would go for the lows. This would be my target. Why? All of this is trendline liquidity here. All of this is just trendline liquidity. See? Trendline liquidity, which needs to be taken out. And we've got a little bit of imbalance down there. Now, ladies and gentlemen, that's it for the week. Once again, just to explain why we do this on Tuesdays. Mondays, normally the setups that we're trying to take, they don't really play out to the T. Most of the time, get out of break even or get our stops loss taken out. So we decided to focus on Tuesday to lay the rhythm for the week ahead. So Monday, we're just waiting for the market to basically digest the previous week fundamentals and order flow. And then on Tuesday, we join the market movement. We also don't trade Fridays that much. One would argue that we are basically downplaying our age or something like that, but it is the edge comes from research market analysis after saying that no, the market doesn't move away on Mondays and on Fridays as well. On Fridays, we don't take new trades. However, if we have setups that we've been holding, we manage that closely by tracking current market price with the trading stop and other money management strategies that we use. If you'd like to join us, there's gonna be a link below for our group on Telegram. This is the group that we have on Telegram, Power Circle. Yeah, lots of content, motivational content, as you can see, signals with all the specifics, order type, stop loss, target profit, and a bit of risk management ideas, yeah, setups. And if you'd like to follow us on Instagram, it's at Wall Street Institute and Company, wallstreetinstitute.co. That's how it will appear. Let's just wait for it to load. A second. There we go. It can also appear as Max Black. Yeah, that's it. That is where you will find us. That's where you will find us. I'm trying to get to. So it's taking me straight to my story when I'm trying to. Yes, there we go. That's how it looks. So 148 followers so far. Thank you so much. We trade SMC, which is basically supply and demand. Personally, I'm a market analyst, risk manager, and a psychology coach, focusing on forex, gold, oil indices, and other on flow. And you can click on this to register. So look at that. Lots of nicely educational content. We don't post much about the cars, the houses, and stuff like that, because we understand that what's really going to change the trajectory of your career is information. We also believe that information changes situation. I would really appreciate if you guys can follow this page. Let's hit 1,000 followers. And at 1,000 followers, I'm gonna give away one of my courses for free. Sounds good? Yeah, there we go. Right. Ladies and gentlemen, that's it for today. Have a great trading week. Stick to your trading plan. That's it. Cheers.